Hello, Tiernorts, and welcome to this daily market commentary for Wednesday, the 12th of June, 2019. I hope all of you are having a successful start to the week. We have reached the midpoint, and I, for one, am certainly looking forward to the weekend, as I'm sure you are too. So what happened on Wednesday? Well, Tuesday's lackluster price action had the markets looking for a return to some volatility on Wednesday, and that's exactly what they got. Both the FX and crypto markets started off quiet enough. Bitcoin seemed content to trade around the $8,000 area, as Ether was happy to trade just under the $250 mark. However, about halfway through the New York morning, without any sign of any obvious catalyst, we are heading higher at a rapid pace. Bitcoin trades up as high as $8,260, and Ether trades up just shy of the $261 mark. Even XRP, or Ripple, manages to poke its head above the 40-cent level. I think the simultaneous breaking of these psychological levels, 8,000 for Bitcoin, $250 for Ethereum, and 40 cents for Ripple, seems enough to have caused the move, and maybe some short covering from those traders who thought the broader rally was over, or were perhaps looking for an extended dip off the recent highs. As we head towards the end of the day, we are marginally off best levels, with Bitcoin trading back down towards 8,100, but certainly enough green on the screens today for the crypto bulls to get excited once more. As for FX, we've had another quiet start to the day, but we did see the markets light up courtesy of another tweet from President Trump. Seems like almost a daily event. And today was going to be no exception. Although China was mentioned, it seems today's wrath was directed more at Germany. Germany and much of the European Union will soon benefit from the Nord Stream 2 project, which will increase the supply of natural gas from Russia to the European Union. Mr. Trump threatened sanctions against those countries directly involved with the pipeline, the most notable being Germany, France, and Austria. His rationale being that the US spends billions of dollars defending Germany from Russia, and yet Germany are putting billions of dollars into the pockets of the Russians through the supply of natural gas. So it will be interesting to see how that plays out, but it was certainly enough to send euro dollar lower from around 113.20 down to a low of 112.82, and it's often the case when euro dollar has a move, in this case moving lower. Many of the other currencies that are quoted in a similar vein, so sterling against the dollar, Australian dollar against the dollar, etc., tend to move in a similar manner. For those crypto traders listening to this or watching this, you can look at euro dollar a little bit like Bitcoin. When euro dollar moves, everything moves. When Bitcoin moves, everything moves. So very similar in that respect. So sterling, as I mentioned, followed suit. That slipped from around 127.25 down to a low of 126.81, and the Australian dollar, which I'd highlighted earlier in the week in a technical piece, finally broke through that support at 69.55 area down to a low of 69.25 on the day. And conversely, we had dollar CAD seeing the Canadian dollar weaken also, with the dollar CAD running from 132.70 up to a high of 133.40, and dollar yen remained fairly steady around the 108.50 area. So all in all, a good day for the dollar, while equity markets in Europe and the US edged lower, but not by any great amounts. The US markets were down around about 0.25%, although the Russell index did actually show a minor gain on the day. The commodity markets, gold and oil went in different directions, but for the same reason. Fears of a slowdown in the US economy certainly dominating the commodity markets at the moment, and that was enough still to see gold take another leg higher up to a high of 1336.70, while oil had quite a significant drop on the day, down 4% to $51 a barrel by the New York close. Moving on to a little bit of technical analysis, I'm going to bring up the same chart that I brought up the other day, but a couple of days later. This is a euro dollar chart, an hourly euro dollar chart. When I brought this up the other day, I was highlighting the fact that we had a double top here from the middle of April around 113.24. I think when I put this chart up, we'd actually just broken through it. And often the implication of breaking through double tops and double bottoms, or triple tops and triple bottoms, is that that break will see a significant move in that direction from that level. I think if you had to give this this chart a particular title, you can probably still call it the break that was not a break. As you can see over here, we've had a couple of attempts to stay above that break level, and we failed. And today we've sort of come back down below the 113 level. So closing here at the New York close around 112.89, literally just a couple of or half a dozen pips off the lows of the day. Two things I've brought up on this chart. This line here is the 200-hour moving average, and you can see that, you know, since we rallied off the low, or this low here around 111.15, we were very shortly trading back above that 200-hour moving average. That probably comes in around 112.70 now, so you would expect that to be somewhat of a pivotal point. It should act as a support, but if it breaks, it might be significant. And also down the bottom here, I put on an RSI, a relative strength index. In very plain English, this is just something which shows us whether something is overbought or oversold. For all intents and purposes, when it drops below the 30 mark, which it did do today, you can just see just below that line, it's considered to be oversold, and anything above the 70 mark is considered to be overbought. So we might just be a little bit overdone on the day, but do keep in mind this is only an hourly chart, so probably wouldn't take so much for it to get back into somewhat more neutral territory. And that really concludes the commentary for today. 2 more days left for you FX traders, and of course for you crypto traders, the fun never ends. Thank you for joining us, and we look forward to speaking to you tomorrow. Cheers.